Welcome back, Block Owner One, home of value investing and disruptive innovation and tech. Pearl Cullen inside, and today I will just be doing my 2023 year in review and 2024 outlook. Okay, so I'll just be sharing with you my top events and stories that shaped the crypto and tech industry of the year. Like markets require catalysts to ignite substantial moves in either direction, whether that be to the upside or the downside, and they require compelling narratives as well to sustain those moves in either direction. So yeah, just gonna run through the biggest events and stories that shaped the tech industry this year. Okay. So before I share my opinion on the biggest events that shaped the industry, it's best to talk about the macroeconomic environment. Okay, so we've been in a contracting environment for over 12 months. We've been in an environment of high interest rates. Okay, interest rates have been rising continuously throughout the year. We're up to what, 5.5% in an effort to beat inflation. So the cost of borrowing money, the cost of debt has increased substantially, especially when you consider that, borrowing money before was, near 1%. Okay, money was practically free and given out, and it was like that for years in an effort to fuel the economy and fuel growth. So in this new environment, when interest rates have risen, a lot of people have been caught out. Do you understand? A lot of companies were caught out because they just weren't expecting it. Some narratives were destroyed, such as Bitcoin being a hedge against inflation. In my opinion, Bitcoin is not a hedge against inflation. Bitcoin trades just like tech stocks. Bitcoin trades just like tech stocks, but it's a more risk on asset. When interest rates rise, asset prices tend to fall. And you would have seen that within the markets, although there was one major narrative which fueled growth this year, which was obviously artificial intelligence and the hopes of AI and increased productivity. And at the start of the year, there was even a liquidity crunch, which led to a couple of bank runs that took place. And these were the banks that financed a lot of the tech companies within Silicon Valley. Okay, even though these banks were eventually bailed out by the US government, there's a few people pushing a narrative that Bitcoin is going to be the new world reserve currency due to dollar debasement, and the collapse of these banks were fueling that narrative as well. Although that narrative has now lost steam quite quickly. In fact, Bitcoin is not going to be the world reserve currency anytime soon, and you don't really have to fear dollar debasement. Like, the dollar has been performing quite well throughout the year. But even given the unfavorable macroeconomic environment that hasn't helped growth, okay, there's still been a lot of activity within blockchain and within crypto this year, which we can take insights from. There's been a lot of trends. So for instance, normally during the bear market or the bottom of the market cycle, you'll see long-term investors strategically accumulate near relative lows, and they would have done well this year. Okay, they would have doubled their money. Like, Bitcoin's up what, over 160% for the year. So yeah, they've done well. In the Bitcoin ecosystem, we also saw the introduction of Ordinals. Ordinals enable the inscription of unique digital artifacts like images and text directly onto individual Satoshis. And this innovation is deemed to bring a new dimension of NFT-like uniqueness and creativity to the Bitcoin ecosystem. Okay, like, many people thought that this was impossible or just wouldn't happen. So it's kind of like Bitcoin is enabling new features. Like, it's the biggest development within the protocol for years, practically since inception. All right. And it's kind of like you can now see a future where Bitcoin may even enable smart contracts, even though Cardano, which implements extended UTXO, runs smart contracts. Okay, but shameless plug for Cardano. Cardano's been doing it for a while now. So yeah, with the inscriptions on the Bitcoin network, you've seen inscriptions pop up on other networks as well, such as your Litecoin or your Avalanche, which also boosted transactions and fees on these networks too, as people start to play around with these new features. So also in 2023, we had renewed hope of a Bitcoin spot ETF. Okay, there was a big win for Grayscale and the crypto industry when it came to a Bitcoin spot ETF. We also saw BlackRock come in and file their own application for a Bitcoin spot ETF, which was seen as a major positive within the crypto space, within the crypto industry. Okay, we saw several new applications being filed by asset managers that we've seen before, and also new asset managers for a Bitcoin spot ETF, showing renewed hope and renewed optimism. The deadline, I believe, is early January, the first week of January, I believe, for a decision to be made by the SEC. So we'll see whether or not that goes through and that happens. And that's really been the major narrative being pushed during 2023 for Bitcoin. Now, with Ethereum, the second largest asset within the crypto space, 2023 recorded only the second time that the percentage of ETH holders, and I'm referring to ETH holders that have held ETH for more than 12 months. So if you think about it from a financial perspective or an accounting perspective, this would be a fixed asset now. It will be considered a fixed asset. They're not current assets anymore on the balance sheet. These ETH holders have surpassed BTC holders, which is likely in part due to staking. So users can now hold various forms of liquid staking tokens that earn interest while sitting in a wallet. Essentially, it's like putting your money in a bank and earning interest. I'll do a video on staking in the future. Okay, that's coming up soon. In the Ethereum ecosystem, we also saw the Shapella fork at the start of Q2, so you're talking April 2023. It was a significant upgrade to the Ethereum network, which introduced key features like staked ETH withdrawals and also enhancing protocol efficiency. And it's seen as a key milestone within the Ethereum evolution. Okay, and with that, we also saw a growth in layer 2s, which is deemed to be Ethereum's scaling solution. Okay, so we saw the launch of Coinbase's very own Base layer 2. And 2023 was a big year for scaling. 2023 was the first year that the aggregate amount of transactions executed on L2s exceeded those of transactions made on the mainnet. And with layer 2 transaction growth came layer 2 fee growth as well. The two go hand in hand. Increased numbers of transactions and increased number of fees being paid on mainnet. And whilst this sounds positive, it does have its drawbacks as well. Even Vitalik spoke about the problems with rising transaction fees and the Web3 vision actually fading because of this. Your average consumer will not want to pay high transaction fees. The only people that are willing to pay these high transaction fees are gamblers, are the degens, okay, are traders. So also in 2023, we saw a semi-resolution of the XRP case, where XRP has been deemed a security when sold to institutional investors, but not a security when sold to retail. Now, for me personally, as I've said in my video on XRP being a security, it does meet the criteria of the Howey test, I believe. If you haven't seen that video, then, please go and check it out. With all the bullish sentiment, we've seen an increase of leverage within the market as well. So if you look at the perpetual funding rates across several major tokens, you can see like throughout the course of the year that the annualized funding rates have been slowly increasing. Additionally, the ratio of open interest compared to the market cap of multiple tokens has been increasing in the last quarter, which indicates that more volume is flowing into the perpetuals market as users aim to make bigger returns. Okay. So again, top stories for this year. This year can really be considered as the war against crypto. So we've seen a lot of regulatory and enforcement action take place. SBF, Sam Bankman-Fried, the head of Fallen FTX, convicted of fraud. He was found guilty of multiple charges, including securities and commodities fraud. We also saw Binance fined 4.3 billion by the CFTC, the largest penalty ever levied by the US Treasury. Binance actually pleaded guilty to criminal charges related to money laundering and breaching international financial sanctions. Binance is also fighting 13 charges from the SEC. In addition to that, several other crypto exchanges are battling lawsuits from US regulators. Kraken was charged with operating as an unregistered securities exchange. So this year has really been a year of regulatory enforcement by the US. And that's largely been it within the crypto industry. So the major narrative has really been hopes of this Bitcoin Spot ETF being approved. And crypto advocates are banking on institutions now becoming involved or now having access to crypto markets. And there's now hopes that with Binance being charged, CZ resigning and leaving Binance, and also the conviction of SBF, a resolution to that case, that, the crypto market can move forward. There will be new players coming into the market, okay, and taking over these institutions which, we wanted to fight against or escape from, which we wanted to move away from, will now be the major players within crypto. Yeah. And looking at the technology industry and looking at equities in general, obviously artificial intelligence has been the major narrative this year, as I said at the beginning of this video. ChatGPT, which was launched at the end of November 2022 or during November 2022, really paved the way and opened the floodgates, okay, for what's possible and what can be done and where we currently are with artificial intelligence and AI. And since that, a number of other companies have released their LLMs, their language learning models as well, and released their AI chatbots And we've really seen the year of the Magnificent Seven. Okay, so your Apple, your Microsoft, Meta, Amazon, Alphabet, Nvidia, and Tesla. Okay, the Magnificent Seven is what they're being called, and these companies have been propping up the S&P 500 index for most of the year because of the hopes around artificial intelligence. They've driven most of the gains in global stocks this year. As I said, like, you need a narrative, you need a catalyst, and you need a narrative, and that's been the major narrative. It's drawn investor excitement and optimism. Some may even say over optimism within the markets. All right, especially after a tough 2022. But the developments being made in AI and AGI, artificial general intelligence, aren't without merit. And whilst the forecasted increases in productivity are significant and substantial, there are also risks associated with AGI as well. And they are existential risks for the human race. So much so that there was a letter written during Q2 of this year and signed by a lot of industry experts to pause the development of AI for at least 6 months. Although I'm pretty certain that there are companies that have still been developing AI and not listening to the 6-month pause and not waiting for it. And whilst investment conditions haven't been great this year thanks to the macroeconomic environment and the increased borrowing costs, investments are still being made. It's just where people are deciding to allocate capital. And a lot of big tech companies have vastly outspent venture capital groups with investments in generative AI startups. And they have the money to do so, they have the balance sheets. We haven't heard much from Apple, although best believe that they are working on something, without a doubt. We also saw Sam Altman, who was the CEO of Open AI, be sacked by the board and then reinstated a couple of days later, with the old board resigning. 3 of the old board members resigned and then 3 new members came on. So there's a clash between responsible AI and what's beneficial for the world and what's beneficial for corporations and company profits. There's a conflict of interest there, and companies are absolutely enamored with AI and the potential returns which may result from AI and the increased productivity and value added. So much so that they disregard the potential risk to humanity, or they choose to heavily discount the effects to future generations. But yeah, looking into 2024 outlook, I'll provide you with 2 possible scenarios, one favorable and one that's unfavorable within the markets. As I've said before, I don't generally do price predictions, but here are the major events that we can look forward to in 2024, which can potentially act as catalysts for the next big moves to the upside and to the downside. So in 2024, the major event is obviously the halving, which many crypto advocates, or at least Bitcoin advocates, believe will propel Bitcoin to new highs, new all-time highs, alongside and coupled with the approval of a Bitcoin Spot ETF. Now, in my personal opinion, I don't believe that the halving will be as significant as these people expect. But again, it depends on how well this narrative is pushed. I also believe that this Bitcoin Spot ETF, if it does get approved, will be a buy the rumor and sell the news event. That's just my belief. My belief is that most investors will look to cut their losses or lock in their gains within crypto and move towards AI, redeploy that capital and those gains into artificial intelligence. I believe that artificial intelligence has the greater potential for a bigger return on investment, because there are real use cases that benefit the world at large, and you can actually see the value added already. That's just my belief. Now, obviously, there are issues with AI, and a couple of lawsuits have even been filed in regards to copyright issues, but I believe that these will eventually be resolved. There are less issues with AI, I would say, than with crypto in regards to regulatory issues. I believe that the regulatory issues within crypto will still exist and will still continue throughout 2024. I believe there will still be more convictions that will take place in 2024 in regards to crypto and some of the players within the industry. And within 2024, we should see banks start cutting interest rates. And when interest rates fall, then asset prices should start rising as debt now becomes cheaper and people are willing to take on a lot more risks. In 2024, we also have the presidential elections coming up, and that will have a major effect on the markets, because each of these presidential candidates will have their own philosophies and their own worldviews on certain topics. I will be doing a video that breaks down each of the presidential candidates, their philosophies, their worldviews, and also their manifestos as well. So look forward to that. That will be coming soon as well. 2024, it's my belief that even if a Bitcoin Spot ETF is approved, it will be a buy the rumor, sell the news event. I don't believe that the halving will have a significant impact on the price of Bitcoin as well. But again, it depends on how well that narrative is pushed. I see more development and I see more resources, more funding being deployed into artificial intelligence. And I believe that's where the returns are most likely to come from. But who knows what will happen next year. But yeah, 2023 year in review. Pal Colin, I hope you enjoyed the video. If you did, please hit the like button and share it with a friend if you think they may find the content or the information useful or valuable. Hit the subscribe button and hit the notification bell to be notified of new videos that I will be releasing. I hope to put up a new video every Sunday, as I've said before. I hope you have a great new year. And yeah, see you next time. Pal Cullen, Block 101, home of value investing in disruptive innovation and tech.